Hello and good afternoon, good evening, wherever you're tuning in from, everybody. It's Rod with Pow Group. Welcome back on the Pursuit of Wealth, your home for MJ stocks, crypto assets, and interviews. Today's Friday, May 19th. Happy Friday. Hope you're well. And in today's video, going to be discussing a recent article here from the Bank of Canada. They say that mortgage payments could spike as much as 40%. This is something that I've been warning about for a while now and something I've been preparing for quite some time, at least a few years. I'm going to give my thoughts and opinions on this, and this, just as on the outset here, this isn't to spread fear or anything like that. This is just to be prepared, right? We can dip our head in the sand and, bury our head and not pay attention to what's going on in the world, or we can embrace it head on and we can be prepared, right? Things can go up, down, or sideways. And the best thing we can do is just be prepared for all scenarios. No one has a crystal ball, but if we did a little bit of research back in 2020, 2021, anybody could have figured out that this was probably going to be the case. So before we get to it though, make sure to smash the like, help support me in the channel. It doesn't cost you anything. If you're new, you can subscribe. Take the bell, you'll be notified on any future videos or when I go live. Getting close to that 500,000 view mark, so thank you very much first and foremost to the community. And I also posted a video back, this was 3 months ago. I posted a video called My Real Estate Portfolio Game Plan, and that had to do with real estate here in the condo market, in the undervalued, in my opinion, an undervalued market here in the condo market here in Edmonton, Alberta, Canada. And I've also talked about how I'm utilizing Airbnb and VRBO as a way to make positive cash flow, actually some really great cash flow. And then I talk about double dipping with the appreciation of the value of the home, similar to what I did in Prince Edward Island and here in Canada back about 10 years ago. So again, highly encourage you to check that out if you want to know my exact real estate game plan portfolio, but not going to jump into that for the sake of this video, just at an effort of time. And like I said, I've already gone into deep dive into that video, so you can check that out if you want my personal game plan. But this is the article here that I'm referring to. The Globe and Mail, Bank of Canada says mortgage payments could spike as much as 40%. And there's no shortage of bearish articles like this coming out lately. So the BOC estimates that mortgage borrowers who renew their loans over the next few years will see a spike of 20 to 40% in their monthly payments. And again, this is something I've been warning about for a while now. So far, the bulk of borrowers have not felt the sting of higher interest rates because their mortgages have fixed monthly payments, but the bank said that by 2026, nearly all borrowers will have renewed their mortgages, resulting in higher payments, like I said, as much as 40%. In light of higher borrowing costs, the Bank of Canada is more concerned that it was last year about the ability of households to service their debt. The central bank said its annual financial system review. So more households are expected to face financial pressure in coming years as mortgages are renewed. So again, I'm not going to go through all of this article because it is pretty lengthy, but that is the long and short of it. And if we just take a look here at Super Brokers, I pulled this up real quick. If we take a look at the interest rates from the last few years, so from 2020, that's where we've seen the lowest, from 2020 to 2021. So we had, this was the 1-year rate and then 3-year rate here on these columns here. So in 2021, the 1-year rate was 2.79. And I actually bought a property here in Edmonton in 2021, the end of 2021. And I got somewhere around that same rate. But mine was actually it was around 3%, but it was actually for 2 years. And it's with a property that's only, my mortgage was only, $50,000 or something like that because of the beaten down condo market. Again, check out my condo plan video, my real estate investment plan video right here for more information on that. But essentially, you can see here that interest rates were at their lowest, and it's now projected. So if we take a look at 2023, it's 6.34%, 6.14%, right? So you're seeing double, in some cases over double the amount of interest, right, that you're going to be paying. And then there's no shortage of articles out there. This one's from BNN Bloomberg. Canada's housing market is taking the brunt of rate hikes, which is to be expected. Bank of Canada sees financial stress rising among home buyers. That's another article from BNN. Then we have another one here from Financial Post. Bank of Canada sees signs Canadians are having trouble keeping up with their debt. And then shout out to Pow Group member Oddflex for this one. This is a tweet from Genevieve Roche-Decter, who's a CFA. So good morning, everyone. Americans are not paying off their debt, credit card debt. So specifically credit card debt. Over 36% of U.S. adults owe more money in credit card debt than they have saved. And some are turning to credit cards to pay their mortgages. This is not good. I don't need a PhD in economics to know this doesn't end well. And you can see here consumer loans, credit cards, and other revolving plans, all commercial banks. And you can see here it's just getting out of control. And that's something I've seen as well here. I was in the elevator actually here in Edmonton in my condo, and they have some of those, statistics and facts and stats and things like that in the monitors. And I think it's Vertical City that runs it. But essentially, they're saying that Canadians are even using their credit cards to pay for mortgages or essentials like utility bills and grocery bills and things like that. I mean, that is not a good practice to be going through right now, because, like I said, I've been shouting from the rooftops from this. I've been cautioning people, like during C19 and during 2020 and 2021, when the housing market was just ripping to new highs. I was cautioning people, like, while most people were rushing in to buy. I had a friend that said, if I don't buy a house now, I may never be able to afford a house. So essentially, that person FOMO'd, which is fear of missing out, into the real estate market at the peak, whenever it was at its highest that it's ever been. That is a terrible, that's a recipe for disaster. That's a terrible game plan, because anytime you FOMO into anything, all rationale goes out of the window. You're just acting on emotion, right? You're acting out of fear of missing out of something, right? If I don't get in now, I might never get in, right? Or just keep going up and up and up and I'm missing out, right? So that greed aspect or that fear aspect gets the best of us. And that is what's going to get a lot of people in trouble. And I've been shouting from the rooftops. That's why I've been preparing for this since 2020. And I was actually going back to PEI, Prince Edward Island, from Edmonton, Alberta, to sell my properties. I sold a property in 2020, and then I sold my second property in 2021 in PEI. I was preparing for this inevitable run up and crash, and then also with all the trillions of dollars printed around the world from C19 and paying people CERB and staying at home, making more money than they were making working during the C19. Well, it doesn't take, like I said, it doesn't take a PhD in economics to figure out that, well, inflation is going to probably go up, right? Too many people chasing too few goods. That's what inflation is. People are getting more money than they were making working, going out for dinner and spending money more than they normally would, right? They're getting more money than they normally would working. So they just get accustomed to that, routine. And then when they go back to work and then they buy a house, for example. So while I was selling my properties in 2021, around the peak, a lot of people were buying and FOMOing in, and that is a bad idea. And you might be thinking, well, I'm not selling my house for 40 or 50 years, so who cares? It's probably going to go up. It's like, yeah, well, that might be true, but could you have got a better price on that, right? It's like buying a stock at all-time high. Why would you want to do that when you could probably get in at a better price, right? Even though in 20, 30 years, it's probably going to be worth more than it was at the peak, right? But you can always get a better price, but it's way different now with mortgages, because you also have debt, you also have inflation, you also have mortgage rates that we're talking about here that are going to be renewed, most of them by 2026, and we could see as much as 40%. I would argue maybe even 50% higher, maybe even more. I have a friend that bought a house and was paying close to $2,000 in mortgage payment, and now it's around $3,000 because of a variable rate mortgage plan, right? So this is scary, right? You get those subprime mortgage rates and variable rates, and instead of a fixed, even fixed are going to be due by 2026, right? So not only are you buying a house in the inflated market, in the overvalued market, you're buying in a time where interest rates are going up, where inflation rate is rising at unprecedented levels and rates, and it's just going to be a time, there's going to be a breaking point, right, where yes, you might not be looking to sell your property or your house in the next 20, 50 years, but what happens if by 2026, most people, let's say they buy a house for $500,000, then it drops to $300,000 because of the market correcting, but the rates go up, right? And you're getting the rate on your principal, not what it's worth today, right? Not the value today. You're still paying principal on what you paid for it when you bought it, right? So, and then not only that, grocery bills are going up, gas bills are going up, utility bills are going up. So not only do you have to fight with rising interest rates and mortgage payments, you have to fight inflation and all these necessities and these essentials, right? So this is really, really bad. And then not only that, people who are piling on credit card debt are going to be paying upwards of 20 to 22% interest on those credit card payments per year, right? So this is not good. And now is the time to prepare, folks. Like, if you're not listening, you need to wake up. Now's the time not to be racking up debt. Now's not the time to be spending money on impulse and buying things that you don't need. Now's the time. We're entering a recession. I would say we're entering a depression. This could be one of the worst sell-offs in financial market history. I'm talking 1929 Great Depressionary style, right? So again, not to spread doom and gloom. This is to wake people up. And I've been saying this since 2020, 2021, and people didn't listen. And now here we are, and we haven't even seen anything yet. We're the tip of the iceberg, right? We barely even see the iceberg. It's barely even poking out yet. So my advice, well, not financial advice because I'm not a financial advisor, this is for entertainment purposes only, but what I'm doing is I'm focusing on paying off debt. I encourage you to do the same, but I'm not telling you what to do. You need to make your own decisions. But I would strongly encourage that you think of paying off all your debt. I don't think anybody think that would be a bad idea, right? Get rid of your credit card debt. However you can do that. Spend less, right? Maybe eat at home more often. Don't go out for meals as much as you would, right? Unless you can afford it, right? If you're not in a situation where you're struggling, or you're having more month at the end of the money, right, instead of more money at the end of the month, well, maybe you don't need to worry about that. But if you're racking up debt at unprecedented levels, if you're stressed and you don't know what to do, well, there's some things you can do, right? You can consult your financial advisor, you can consult some sort of debt, agency, and get some help, right? And most people don't want help, right? Especially with regards to money. They just think it's taboo. They don't want to talk about it, right? They just want to bury their head in the sand. But that is the worst strategy, in my opinion, that you could be doing right now, because you know what is about to hit the fan. Hasn't yet, but it's very, very close. So spending less, right? Get a second income, maybe even a third income. So maybe pick up a job or some sort of, side hustle or something like that, where you can supplement your income, right? Even a third income if you have a spouse, maybe you can get a fourth income. Maybe you can both pick up a second income source, and then you have four, right? Let's say most people have a job, right? So two people have a job, and then you pick up a second income each. That's four sources of income, right? And then you could even start investing, right? Investing wisely, starting off just slow, right? $50 a week or $100 every couple of weeks or a couple $100 a month, and just start buying into assets that are undervalued, right? And just trying to grow your money, getting money work for you versus you working for money. So I just can't stress enough how important it is now to start preparing and start paying off debt now. Start facing this thing head on, because it's going to happen. And if it doesn't, then great, you'll have a ton of savings, and then when your mortgage goes to renew, if it's not 40 to 50% more expensive for your payments, well then great, now you got all this savings, and you're even, there's no bad that could come of preparing for the worst now, right? It'd be a win-win no matter what. So hopefully, I really hope people are listening, because I've been saying this for a few years now, and I really don't think that we're even seeing anywhere close to the magnitude of how bad this is going to get. And again, I'm not trying to make everybody scared and cause fear. Like, that's not my purpose here. My purpose is to help each and every one of you, and to try to to bake this into your brain, because most people are going to wait until it's too late. Don't let that be yourself. And, let this be a lesson to you for anything in life. Don't procrastinate. Just face everything head on. And no matter what, if it's great, if it's a good outcome, bad outcome, we need to prepare for the inevitability of these things that can happen, because they can happen, right? It's Murphy's Law. So going to end it there. It's Rod with Pow Group. Thanks again for joining us on The Pursuit of Wealth. Let me know what you think in the comments below. Let me know what a 40% increase in your payments for mortgages would do to your finances. I'm going to end it there. Again, just wishing you all the best. And if there's anything I can do, reach out. I'll do my best to kind of shed some light or give you some input on what I would do if I were in your shoes. But thanks again. See you on the next video.